Good morning. You're watching Business World Live. I'm Jess De Los Santos. It's the last trading day of 2021. But first, let's go straight to our top story. The Banco Central has further relaxed regulations on the foreign currency deposit system in a bid to promote effective risk management in banks. The revised Monetary Board rules streamline licensing requirements for banks applying for a foreign currency deposit unit or FCDU. Covered banks will only have to notify BSP of their intention to engage in expanded FCDU operations. However, they are expected to comply with standards and requirement of the expanded FCDU license on a continuing basis. FCDUs are local units of banks that are allowed by the Banco Central to participate in activities involving foreign currency transactions. Previously, banks were required to seek the central bank's prior approval before they can engage in expanded FCDU transactions. The new rules allow Islamic banks and digital banks to engage in FCDUs. Meanwhile, the Octa research team says Metro Manila is now at moderate risk for COVID 19 after infections again reached the 1,500 mark. Octa sees this number rising even further to 2,000 new cases by year end. Worse, the group says daily infections could even hit 8,000 by the first week of January. For the Philippine College of Physicians, this uptick in COVID cases is mainly caused by higher mobility during the holidays and wide disregard for minimum health protocols. Speaking to the big story, Philippine College of Physicians President Dr. Maricar Limpin said they are worried with the sudden increase in cases. She also noted that in some hospitals, admissions due to COVID 19 have ballooned to almost triple the number of cases prior to the uptick. Meanwhile, Tourism Secretary Berna Romulo Puyat confirmed that Gwyneth Chua, or the so-called Poblacion girl, was able to skip quarantine to go partying in Makati. Puyat also confirmed that many other individuals tested positive after going to the same bar as Chua. Okay, like what you mentioned on the top of the show, it's the last trading day of the year. In 6 minutes into the session, let's see how local shares are doing so far. As you can see right here, the PSEI off to a bad start during at least in our last trading day here, down by close to 1.7% to 7,213. That pretty much snaps up or cuts 3 straight days of gain so far this week after the 0.7% increase in the PSEI last Wednesday. But so much has happened since then. Again, like what we reported earlier, an uptick in COVID infections over the past few days. Positivity rate has increased multiple folds from just 0.9% last week to 6.6% yesterday. Cases reached 1,000 for the first time in over a month to 1,600 yesterday. Again, Octa team expecting that to hit 2,000 at least for today. And Japit Tantanko of Full Stocks is saying that, while hope normally pours into the market during the last trading day of the year, it will be balanced with uncertainties over our COVID situation. He expects sideways trading on the last trading day of the year. Christina Ulang of First Metro, however, is more optimistic. She is still hoping that we could breach 7,400 today. But again, seeing at how we are performing so far today, it seems like a sell-off will ensue in the last trading day of the year, with the index again so far down by 1.7% year to date. However, let's see how we have been performing earlier in this before we started the broadcast. The index so far year to date has already increased by 2.7%. Let's see how things are going to fare as we close the trading year. Now, also, let's have a quick check at our leaders and laggards for today. Let me just refresh this chart right here. You can see here, it's a sea of red here for the main index, not even a single stock here starting the session in the green. You have at least ICTSI, the day's worst performer so far, down by 3.3%. Wilcon Depot, Ayala also shedding close to 3%. A number of stocks here are losing as much as 2% at the earlier part of the session. Again, it's a sea of red, as you can see right here, a total bloodbath here as we start the session. Also, One other stock that we have to keep an eye on would have to be RCBC. As they target to sell no less than 3 billion pesos of sustainability fixed rate bonds. Funds raised will be used to support asset growth and refinance maturing liability as well as other general funding purposes. As you can see right here, RCBC at least embarking that sell off across the local bourse. You have the Splendor here increasing by 0.5% to 20 pesos and 10 centavos a share. Here are other headlines we're keeping our eyes on. The government is set to decide on the extension of the compliance period for the Comprehensive Automotive Resurgence Strategy or CARS program within the first quarter of 2022. That's according to Trade Secretary Mon Lopez. Lopez told the Philippine Star that discussions on the extension are ongoing. Initially, the extension of the CARS program compliance period was expected to be released last June. But with the passage of the Create Law earlier this year, the DTI said there is a need to make sure that the recommended extension is in line with the law covering the grant of incentives. Under the IRR of the Create Law, the FIRB may approve temporary measures to support recovery of businesses without reduction in their incentives during major disasters. And since the country is under a state of calamity until September 22, the DTI said the government is looking at extending the compliance period for the CARS program by around 2 years. Weeks after Typhoon Odette left the Philippine area of responsibility, the casualty count and damage tally are still going higher in its aftermath. The death toll from the onslaught of Typhoon Odette has now risen to 405. The Agriculture Department is also reporting damage and losses to farms and fisheries amounting to 8.4 billion pesos. That's higher than the NDRRMC's tally of 6.6 billion pesos in damage to agriculture. Meanwhile, the agency is reporting damage to infrastructure worth 16.7 billion pesos. Now, again, a couple of economic setbacks, if you may call them that, as we close the book on 2021 from a debt to another surge in COVID cases. Just as we're about to ring in the new year, how are these going to affect our recovery heading into 2022? Let's talk about that with Professor Ronilo Balbieran, economics professor at the University of Asia and the Pacific. Good morning, Prof. Balbieran. Thank you for joining us today.
Good morning, Jess. Good morning.
Okay, by how much could this current surge that we're seeing, how much is this going to be to set back at least recovery as the economy is just slowly trying to find its footing once again?
Well, I'm hoping that this will not be a major occurrence already that will have a negative impact on our economy. We're only seeing 1 to 2 days of this surge, and hopefully, what we are reading from the international news that Omicron is more infectious but not as deadly. And in fact, there are already some news items that we can already read that it is actually as mild already as a common cold or common flu. So with that, we're holding on. No? So we cannot yet forecast the total impact of the Omicron variant to our economy, but we're hoping that those preliminary news are true, and therefore we are on our way to a higher mobility for our people, and therefore we resume our path to a stronger economic recovery by next year.
Okay, I know this is all hypothetical at this stage, but should
Yes.
there be a surge, or at least if this upturn continues and this leads to another set of lockdowns, or if not, possibly an increase in alert level status, how is this going to impact recovery?
Well, the first impact there is the confidence. No, as you have seen, we have had several discussions about the direct impact on confidence of businesses and consumers. It is not actually a direct impact on their actual spending, but the first impact is on confidence. So when the confidence of the business sector is impacted, and therefore they will have to delay again and again their plans for expansion, for full reopening of their production plants, for their operations nationwide. So and therefore it will have another round of negative impact towards business operations. And then on the side of the consumers, then we if we are to receive this bad news that it is really bad to go around, then this will now impact our confidence, consumer confidence, and therefore this will actually reduce our actual spending over the next 3 to 4 weeks or 2 months, affecting the whole first quarter of 2022. So the projections will now have will it will change the game in terms of our projections. As we have seen, our economic forecasters have been adjusting our forecast upwards, and we can expect that those projections will be revised downwards again towards first quarter and second quarter of 2022, because the hit on consumer confidence and the hit on business confidence will translate into slower spending, and so the rest of the economy will suffer with that dive of the confidence.
Okay, Prof, good thing you mentioned about consumption because prior to that uptick in cases, of course, a huge part of the country, especially in the Visayas and Mindanao, was heavily battered by typhoon with debt. And now, of course, there are already inflationary concerns. How is this going to affect the inflation picture moving forward?
I'm very happy to see that many of the roads that were blocked, etc., the ports and the airports were actually repaired immediately, and therefore the impact on the supply chain will be significantly less because we have resumed our infrastructure capacity, and therefore I see little impact on our inflation for the rest of the year 2021. And I hope that we can already support, no, the damages on the agriculture. That's the only thing that we are monitoring right now. How will the agribusiness, especially in those regions, be able to recover by the first quarter of 2022? So, but as far as the overall economy is concerned, resuming our economic activities through that actually uses our roads, ports, and airports, I'm very happy to see that those infrastructures have been repaired. Though some are temporarily repaired, but we can already use them to actually move around, and therefore this has actually provided a resumption of economic activities and will lead to very minimal impact on the overall 2021 GDP figures.
Okay, safe to say that you don't at least see this making much of a dent when it comes to our economic output or growth for next
Yes,
year.
as far as 2021 is concerned, I think the higher mobility of children, teenagers, and senior citizens, and our Christmas spirit, holiday spirit of
Mhm.
spending and giving, especially for those who were affected by Odette, will more than offset the damages that were incurred to our economy.
So, given that, are you at least one still with other economists and projecting a return to pre-pandemic growth in 2022, or do you see that at least being delayed a bit after these hiccups that we're seeing at the end of 2021?
Minus the potential damages of the Omicron variant that we still have to observe. I think we are on our way to a very strong recovery. In fact, I'm very bullish about our fourth quarter figures, because you only need to grow what 5%, 6% to hit 5% of GDP full year, and therefore I can, the minimum growth for our full year GDP is can be at 5.4%, and we can actually hit 5.7 for the rest of the year if we hit the fourth quarter at 8%. No? And
Mhm.
I think 8% is not an impossible figure for the fourth quarter of 2021, given the mobility of people of all ages.
Mhm, mhm. Now, given that as well, what's your growth outlook for next year?
Well, a 6.5 to 7% is very much achievable. We're very happy that yesterday that the president signed the budget for 2022, and he also signed together with it the extension of the budget of 2021. What does it mean? So the budget for 2022 is 11% higher than 2021.
Mhm,
Plus, if we assume around 20% that were not spent in the budget of 2021 and will be spent for 2022, that's roughly around 30% additional spending by the government, and this will actually push all the other industries, and therefore 6.5 to 7% is a no-brainer for the growth for 2022, and we can work together, private sector and government, to around 8% growth for 2022.
Okay, quite a bullish outlook there coming from Professor Ronilo Balbieran. Thank you very much for your time and insights this morning. Again, Professor Balbieran of the University of Asia and the Pacific. Thank you, sir, and
Thank you
Happy
very
New
much.
Year.
Thank you. Happy New Year, Jess, and to
Stay
the
safe, sir. And that's a first look into the business day this Friday, December 31, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.